Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering 5 stocks with ex-dividends November 13th through November 17th. So I believe this is like episode 13 or 14, and we've actually hit the 3-month mark where some of the 5 stock picks that I picked 3 months ago came up on ex-dividend the next week. So I'll actually be putting out a video of where those specific stocks that I chose 3 months ago that were randomly picked have either gone up or down, and we'll cover that in another future video. But for now, we're going to be covering 5 stocks with ex-dividends next week. So I kind of wrote up a little bit different. I included that time for money to grow. So I kind of just wrote a snippet. I pick 5 random stocks to go over their dividend dates, chart them out, provide my opinion on whether the stock is currently under or overvalued, and we go over the dividend payout ratio, history, and other statistics. So if you do feel that there's an additional statistic that may help in charting out or kind of providing whether a stock is undervalued or overvalued, go ahead and let me know in the comments below. I always value everyone's opinion and listen to it. And if it's definitely something that's beneficial, I will add it in and include it on my following weekly ex-dividends videos. So that's it. Of course, if you are brand new to my channel, I do make financial investment stock videos weekly, so do consider subscribing for that. So our first ticker is MSM, and it's MSC Industrial Direct Co., and they engage in the marketing of industrial supplies of equipment to various industrial customers. The company operates primarily in the United States through a network of 5 customer fulfillment centers and 95 branch offices. Its ex-dividend date is next Monday, and then you would be paid out on the 28th of November. So the ex-dividend and the pay date sits within the same month. So below here we have the chart. Its dividend yield is at 2.2. Its price right now is at $81.70, and its price to book value is 3.76. So when MSM is charted, it shows that the current stock has a higher yield to price at this time, which would indicate that it is undervalued at this time. The stock is also under in the industry price to earnings average. It is below the 60% payout ratio that I like to look for. It has had dividend growth for 6 years, and it has a price to book value of 3.76. So it is higher than 3, where some value investors would consider a value buy. Its price to earnings ratio is 20.21. The industry average right now is 26.32. The dividend yield is sitting at 2.35. The annualized payout is $1.92 per share, which is not bad at all. For a $100 stock, if you put $1,000 into it, say $1,000 in, you would get 10 shares. You would get $19 back. Yeah, $19.20 back per year for those shares. The annualized payout ratio is, we already covered that, payout ratio is 43.2. So they're well below both the 60 and 50%. So even if they had an earnings where they decrease their earnings by 25%, their payout ratio increased from say 40 to 70%, they would be well below their earnings ratio and would be able to continue paying out dividends and increasing it. So they've had dividend growth for the past 6 years, and their annual dividend growth rate is 6.7% from year 2016 to 17. The next stock is ticker symbol PCAR. Now PCAR, or PCAR, Incorporate, engages in the design, manufacture, and distribution of light, medium, and heavy-duty trucks. It is related aftermarket distributions of parts worldwide. So it's an international company. It's not just the United States. Their ex-dividend date is 13 November. This should actually be Monday. I will fix it. Its pay date is 5 December. So here it's charted here. So PCAR, when charted, it does show that the stock has a higher price to yield, which would indicate at this current time that it is overvalued. The stock is under in the industry price to earnings average, and it is also under in the 60% payout ratio. and it's had dividend growth for 7 years. Its price to book value is 3.12. So we can see here that the price to book value was around 3.5, but it's fallen back a little bit lately, and that could be due to the price of the stock kind of coming back down, which would have given it like an equal, not really equal, because 1-for-1 would be you're paying 100% of the price for 100% of the book value. In this case, the book value is 3.1, so you're paying a 312% premium for that stock price. So it's still better than some, but not the best. It is also, the price is way over in the dividend yield, so you can see the yield has dropped dramatically as of September, and that's because that stock just shot up into the $73 range. So here we have the annualized dividend yield, which is 1.42. Annualized payout is $1 per share, so if you bought 10 shares at $700, you would get paid, well, 10 shares, at $700, that would give you $10 per year. Its payout ratio is 23.9, so it's a very low payout ratio. They've had dividend growth for the past 7 years. They've had annual dividend growth of 4.3. So pretty low as far as dividend growth goes year to year, but they do have a low payout ratio, which could mean that they could bump that dividend growth out a little bit. Now the next stock we're going to be taking a look at is ticker symbol LSTR. And this is Landstar Systems. They provide transportation capacity and related transportation services to shippers in the United States, Canada, and between the United States, Canada, and Mexico, and other countries. So it could be something just in North America. Who knows? They didn't really specify other countries. They just kind of said other countries. Their ex-dividend date is also Monday. So all of the 3 prior stocks that we've covered, you do need to buy them on Friday or prior to be eligible for the ex-dividend date on Monday. You would then get paid on the 8th of December. So looking at the chart here, the stock price is $98.65. The price to book value is 6.36, and its current dividend yield is 0.38. So very low dividend yield. So LSTR, when charted, it shows that the current stock has a higher price to yield, which would indicate that it is overvalued at this time. The stock is over in the industry price to earnings average. It is also it is under 60% payout ratio, and has had dividend growth for 12 years, so I would consider the stock semi-recession proof. Its price to book value is 6.36, which is higher than 3, where value investors would consider a value investment. Its price to earnings ratio is 27.28. The industry is 25.09. The dividend yield is 0.41, so very low dividend yield, 40 cents per share. So basically, this stock is $100. If you put $1,000 down, that would be 10 shares. You would get 10 times 0.4. What is that? $4 in a year for a $1,000 investment. So that is pretty low for a stock like this, LSTR. I would definitely want some growth potential. You know, they have a very low payout ratio, similar to Apple. So this is a stock that I would expect to have very nice 1-year and 5-year growth. And you can see that here. A 1-year growth, 31.86%. 5-year growth, there, 97.84%. So this company, similar to Apple, similar to Nvidia, similar to Activision Blizzard, they're a company that believe that they can take and reinvest their earnings back into the company to make themselves more profitable, make their stock jump up and become worth more. So definitely something to consider if you're looking at both dividend and growth stocks. This could be a good in-betweener. Let's see here. And, you know, dividend growth for 12 years. So long-term dividend buy and hold, both for growth and for dividend payout, even during recessions. And they've actually had annual dividend growth of 13.3. So your initial investment of $1,000, if you took 72, the rule of 72, and divided it by 13, in about 5.5 years, if they continue to increase their dividend by 13.3%, at about the 6th year, you would actually see your initial dividend payout double. So if you bought 10 shares for $1,000 and you were paid $4 for the first year, the second year you would get paid out, say, $4.40, $4.60, $4.80. By the sixth year, your $4 for the exact same investment, you would be paid $8 if they continue to increase their dividend growth by that same percentage. Or they could bump it up. The next stock is Yum. Now this is one that I have actually looked into myself, but I never actually bought. And Yum Brands is a restaurant company that operates various restaurant brands, including KFC, Pizza Hut, Taco Bell, Long John Silver's, and A&W's All-American Food Restaurants. So I know we have a couple A&W's here where I'm at on the West Coast. We also have KFC, Pizza Hut, Taco Bell here in the city. So all of these are very popular. It's restaurants specialized in chicken, pizza, and Mexican style food, and just basically quick service seafood category. No, excuse me. Its ex-dividend date is Tuesday, November 14th. Its pay date is 8 December. And here, when charted, I also included the price to book value in this chart, but it does not show it. So it's kind of an indicator right off the bat that I was like, why isn't the price to book value not showing? So the current stock price is $81.01. The current dividend yield is 1.74%. When looking at this information, when charted, it shows that the current stock has a higher price to yield, which would indicate that it is overvalued at this time. The stock is under in the industry price earnings average. It is sitting below the 60% payout ratio. It's had dividend growth for the past 8 years, but its price to book value is negative 4.499. So if a company has a price to book value that's negative, that's because the company's book value is negative. It'll also make the price to book value negative. So this company book value is negative. If we go over here to Yahoo Finance, we click on their finance tab and we look at their balance sheet, we'll actually see that they're probably picking up liabilities up the yin yang. So here their total liabilities have been increasing. I believe this is quarter. No, we're looking at yearly. We can go back and look at quarter too, but let's take a look at their liabilities. They're increasing quarter after quarter after quarter. From 12 to 10 wasn't too bad, but they kind of bumped it up a little bit more. And look at the net tangible assets. They're actually going down 6.5 and 6.7. I believe that's in the, it starts off in the thousands, so thousands, million, billion, so $6.7 billion and net tangible assets negative. So that's why their price to book value is currently sitting in the negative, because their company's actual book value is negative. So in my opinion, not a great stock to be invested in. I can see this one coming down pretty hard, similar to one of the pizza ones. I think it was Papa John's, I think is what somebody was, or Domino's. I know there was somebody talking about pizza stocks a couple weeks ago, months ago. Dividend yield, 1.48. So the stock is still going up for some reason. Annualized payout ratio is $1.20 per share. Payout ratio is 42.9. Dividend growth is 8 years. Annual dividend growth is 11.8. So I want us to take a look here at their retained earnings. So they're actually losing, look at their earnings, retained earnings, that they're probably taking out debt to pay out the dividend. It doesn't actually show me other stockholder equity. So they're just, going down in the dumps. I'm not going to take too long to kind of look at them. I looked at them in the past and I just didn't like their balance sheet looked terrible, and I don't know how they were trading at that high. The last stock that we're going to be covering is ticker symbol WTR, and this is Aqua America. And they operate as a holding company for regulated utilities that provide water and wastewater services in the United States. It serves residential, commercial, fire protection, industrial, and other water and wastewater customers. Their ex-dividend date is Thursday, so you do need to own them on Wednesday or prior. You would then get paid out on the 1st of December. Their stock price is $36.29. Their price to book value is 3.32, and the current dividend yield is 2.15. So WTR, when charted, it does show that the current stock has a higher price to yield, which would indicate that it is currently overvalued at this time. But the stock is also over in the industry price to earnings average. It is over in the 60% payout ratio. It does have dividend growth for past 9 years, and its price to book value is 3.32, which is higher than 3.0, where value investors would consider a value. So it's a utilities company. That's what it is. And utility companies, they generally pay out over the 60% ratio. The price to book value, this one doesn't seem too bad. It does, price to earnings average is high than the standard industry. So this one's sitting 27.36, where the industry is 18.58. Dividend yield is 2.26. They pay out 82 cents per share per year. It's actually pretty cheap. Payout ratio is 60.2, so a little bit, 0.2% over the 60% ratio that I like to look for. Dividend growth for the past 9 years. They've actually, when I looked into this one, let's go look at, what was the ticker? WTR. So I have this pulled up here, WTR, and their dividend here. We could take a look at it for 10 years, and I could just knock out the price. We'll just look at the dividend. You can see that for the past, they've only, like right here, they had a little bit of a time, it looked like, where they did increase the dividend, but they've been paying dividends for, almost 20 years, if not more. And the price to book value here, you can see is 3.32, just like I had said in the video, or actually still showing off in the video. And if we look at the revenue, free cash flow, and net income, let's go back to the 1 year. We'll actually take a look at their 3 year. So besides their cash flow going down negative 446% in the last 3 years, yeah, let's go back over here. So that is it for this video. I hope you did enjoy the article and this video. If you did like the video, go ahead and hit the like button, comment below. Remember to share it with all your friends that are interested in investing on Facebook and Twitter. I want to know what's on your guys' minds as far as if you guys are invested in any of these stocks. The stocks again are MSM, PCAR, so PCAR, LSTR, YUM, and WTR. So out of these, I'm not sure, I think PCAR is not a bad investment. It is very high. But of course, I can't really take a look at these and kind of know right off the bat. There's a lot of red flags with the way that I've described each of these. Some of them have a higher yield to price. So take, for example, I think this is the only one that had a higher yield to price. Let's take a look really quick. Higher price to yield, price to yield, price to yield, price to yield. So taking the first one that had a higher yield price, which is MSM, and we go over here to our charts, MSM, whoops, I put in Macy's, that one's going to be terrible, MSM, and we take a look here at the 5 year, 3 year, they're actually not doing too bad. They've gone down a little bit in their revenue, but overall they're still on an upwards trend as far as free cash flow goes and net income. And price to book value is, take a look at that actual number, 3.76. Price and dividend is, their dividend yield for the year is over slightly than the price. It's right about average, is around this 2.2%. It's right about average. It's not really under, it's not really over. It's semi undervalued at this current time. But it's up for you guys to make your opinion on one of these stocks that are, if you'd like to swing trade or just kind of buy and hold. So that is it for this video. Go ahead and let me know in the comments below if you were actually investing in any 5 of these stocks that are coming up on Ex-Dividends next week. Go ahead and leave that in the comments below. I hope this video has been interesting. I thought it was interesting kind of researching all of these and kind of finding a little bit more information on each of these that I've never really looked at in the past. So that is it for this video. Hopefully you have enjoyed the video, and that is it. Thanks. Have a great day. Bye.